Hello, this is Pat O'Mara, and I am here with a number of my friends and coworkers as we are talking about the reality of tokenized private market assets with a real focus on Miami. And we have a treat here with us today, Xavier, who is one of our earliest investors. He was our very first seven-figure investor in the very early days, so thank you. And he's been with us since 2017 on this journey. And we're going to talk about not only his role as a professional investor in private markets, but also in Miami, and talk about why is Miami the hub that it's become, and what it's like, and where we're going to see private markets going with blockchain. And we'll talk a little bit about the past, and we'll talk a lot about the future. And then Marcin and Albert, who both work with me every day, and we'll maybe go around and have some introductions. So Albert, why don't you go first and give a quick introduction? Some people on this podcast have seen you before, but why don't you give a quick introduction of yourself?
Sure. So my name's Albert Perdellins. I'm the managing director of Invenium AI. So I lead Invenium's AI division. And relevant to this conversation, I'm born and raised in Miami. So looking forward to discussing Miami's future.
Fantastic. And now you've been with us just for a little bit, right? And you joined us. Give us the 2-minute version of your background, right? It maybe a little bit more, because I just think your background is fascinating. And give us a little bit more on that, if that's all right.
Sure. So in my previous role, I worked for the largest private landowner in Miami. He owns a good portion of downtown and Wynwood. And, we actually met when we were hosting a NFT event in downtown during Art Basel. So it was very interesting to meet in that context. And in that role, I would always see, real estate deals that took months. And it never made sense to me that you had a meeting of the minds, you had people coming to terms, and then just the machinery took a long time. And I figured there had to be a better way. And so it turns out that that's something that you guys were working on and helping some of the largest companies in the world with. And it's very exciting that Invenium has some technological solutions for problems that people didn't even know were solvable. And so that's an exciting thing to be a part of.
Yeah, it's great to have you on. Your perspective, your focus, the talent and skill that you bring, and the drive. It's been great having you on board. We're excited for the future with you. Marcin, you've been with us for a little bit longer. Why don't you give us kind of the 2-minute Marcin story?
Sure. So been in Miami for about 6 years and a half, a little bit over that actually. Originally from Brazil, born and raised in Sao Paulo. Ran funds for 20 years, real estate and private equity. And over time, got more and more involved in data. That's when I actually got introduced to Invenium through one of my fund admins who's actually an investor. And the conversation just made a lot of sense. My problems with data were really driven towards the perishable nature of data, and the fact that you have to understand where it's coming from so you can know how to trust it. And that's where Invenium just made a lot of sense initially. And it got old running funds with that low quality of data. So information asymmetry was always a big thing.
We're going to dive into some of those topics more and more over this conversation. And Marcin, thanks so much. And Xavier, I'm going to turn it to you. And so give us the 3-minute version, right? I said the
3 minutes. Okay,
guys, you got an extra minute. So tell us a little bit about yourself and what you do.
So my name is Xavier Fernandez. Although I'm born and live most of my time in Venezuela, as my accent probably tells you, I'm French from background, right? And I've been living in Miami since 2014 now. Before that, I was in Venezuela until unfortunately, our country went through a very bad path, right? But I've been coming to Miami since I'm a kid as a good Venezuelan, so I've been knowing this city since the 80s. And, it's changed a lot. What's behind me wasn't there 20 years ago. Um, so that being said, for my origin, what I do is I have a family office, and I mainly do private equity deals with my partner that you all know here. We invest in, we mainly do equity deals. Now and then we can do also private lending, but generally it's always with an idea of equity. And we specialized in tough situations, distressed assets as well, in industries that we think we understand. So we got a very deep knowledge in aviation. That's why we own some airlines. We have engine deals, uh, plane deals, lease, those kind of structure, very financing products. We have also a deep knowledge in telecom, infrastructure mainly. Uh, we also have an energy division. We do hydrogen, we do solar, we do energy efficiency. So, and then we have a collection of different assets in food, in remote working, and Inveniam is part of the investment that were made, and as you say, early stage in my case, right?
And we, I think people know Mayor Francis Suarez was on our board for many years, and as he thought about running for president, he stepped off our board, and he remains a member of our advisory board. He's a close friend, but man, he was really an advocate for Miami in Bitcoin, in crypto, but also blockchain, which is where I met him. Right in 2017, he was a practicing lawyer, and we were looking for an attorney where we were talking about commuting trust in data and having on blockchain a piece of the capital stack of a private market asset with good data that was being fed into it, where you could then trade the capital stack of private market assets and bringing liquidity to the private markets. And we were looking for a lawyer, and we met him. We were introduced to him, and he understood exactly what we were doing. The fact that he understood what the payload of a block was, what a block is, how blockchain works, what Bitcoin was. And he was our outside counsel before he became a mayor, right? And then he became mayor and went on to our advisory board. And we worked with him for quite some time. But boy, he's been a huge advocate, and Miami's been killing it. I want you to talk a little bit about, when I first was talking to you about blockchain, I want to say May of 17, right? We had a tokenization engine. I met down there. I sat down with you. I talked to it. Talk about the evolution of. I'm not sure I was the first person to talk to you about blockchain, but you certainly didn't know what it was. Our first conversation, right? In any way, versus, how that private markets, the trading of private markets, tokenized real world assets. How much is that a part of the milieu in Miami now?
So just a very quick comment about the mayor. You know him much better than I do, and you introduced me several times to him. And at the beginning, when he was saying, "Oh, I'm gonna take Miami to this tech, new capital tech. We want to take the Silicon Valley. I was like, yes, this is just politician talk, right? Impossible to do anywhere, and it's just, But man, I mean, I was wrong. What he's done here is it's pretty amazing, because there is now a capital of blockchain crypto, which is Miami, and we've seen a huge move. COVID helped that move as well, but from tech companies to the city, without talking about all the finance from New York, Chicago, and Boston that is moving here. So it's becoming a very interesting city to be in. So kudos to Francis Suarez. When you came to visit me at that time in Veniam, was a three business company, right? One was a private banking, then you have the technology blockchain, and then you had all what is the advisory, which was a very nice, for me, logic combination, right? You basically trying to look for deals. You have the blockchain and the technology in the middle to link those deals to platforms that allow for an easy sale, and you have the advisory part, which help um, make up the bride. I think was the term at the time that was used in the meeting. Uh, and then the blockchain and the technology part took over because I believe first the message wasn't that clear. I think people from the tech part didn't really like the deal part of the company, and people from all the banking traditional were really comfortable with the tech. And I think it was a smart move to just become a tech company. And um, and the reason why I was really interested in Inveniam is one of the issue we have when we do private equity is liquidity. Right? You own asset, you own, when things go the right way, a lot of paper, but somehow it's pretty hard to get liquidation, right? Liquidity event. Right? You need to sell shares, you need to do an IPO, but an IPO is not something you do every weekend, right? So I thought Inveniam was a very interesting tool at some point in the future uh, to help private equity transaction being more liquid without eventually having to go to a public traded an IPO, a public traded market, right? And I think Inveniam is there in some assets, real estate. I mean, all you're doing with the major clients you have. And one day I expect that we'll be there also for a private equity company.
Yeah, and there's a lot of players. There's not going to be one player. I think there will be a leader who develops, and the will people who will achieve tipping points. But there's going to be many players who are moving the ecosystem. And what Invenium wants to do is allow all of those ecosystem players to work well together to have good data. Where on multiple venues and multiple locations, buyers and sellers with data symmetry can see all of this data so it can trade globally, right? And we were talking with Xavier and some of his partners yesterday on a particular deal that one of his partners is in that's been just a grand slam, and there's a large valuation happening as a new firm comes in, and they own a position, in the high nine figures, and they want to liquidate. They want to pare that trade down, right? And literally they're looking at selling this asset that they own, this substantial gain, to and the liquidity discount was meaningful that they were willing to accept, right? If you could do a block trade, we're going to do this. And the problem is, because of the siloed nature of the marketplace and the inefficiency of the marketplace, there are people wanting to get into that company specifically, which is why it has this high valuation. But the inability to match the buyers and the sellers up in a marketplace or a series of marketplaces that exist digitally with data symmetry so there can be informed buying and selling is how you take a 30% discount and take it to a 2% discount or a 1.5% discount, right? And this is what really DeFi and decentralized finance wants to do. This is what tokenized real world assets are going to do. But it also changes store of value, because as people do this, they know they're making an investment and that money's going to be locked up for 1 year, 5 years, 7 years, 10 years. And that illiquidity, you must be able to support that. And if you can't, you're missing those asset classes, right? And if you can have the data, suddenly that creates this opportunity. And Marcin, this is very much what, when we started our conversation, right? All of a sudden we were saying, hey, listen, we were talking about real estate, and we were talking about real estate in a whole bunch of different geographies, and how do we gain access to that data so that you can see that performance data, not only so that you could manage the portfolio, but so that you could be selling to the investors the quality of the assets that they had, and that you're trading at a discount to larger portfolios that have a brand and a longer track record, but in some cases, inferior inventory, right? Talk to us a little bit about that.
Yeah. So part of the solution that Innovating brings that really attracted me right from the get-go is it's a decentralized solution from a data perspective, but for traditional capital markets. So you're able to start commuting trust in everything that you have, regardless of size. So for large organizations, it's the data centralization is impossible, right? You're never going to get that, right? So you're never going to be able to, if you operate on a global scale or even on a national scale, to make sure that all of your teams and all of your systems and all of your data speaks to each other. It's always the fool's errand. Some people attempt it and they get to some degrees of success, but it's not sustainable in the long run, right? It's not cost effective. Now, for small organizations, it's about really establishing the trust. So if you get one of the top global managers, they're a brand that everyone knows, right? It doesn't matter who they are. You're going to be comfortable with them. You're going to trust that the brand is there and does its job, and their level of diligence is above average. Now, with emerging managers or even managers that are not a household name, you need to establish that trust. You need to be able to showcase, look, what I'm buying is unique. I do my diligence. I cannot afford to take on risk or to be in a bad place in comparison to the larger guys, because I can't miss. I can't get anything wrong. But you need to keep that to your investors. And also in that process, cater to their needs when it comes to their tax planning, their accounting concerns, because it is a more white glove service in comparison to the larger brand names. So absolutely, I mean, addressing all of that and then being able to connect on a global scale is a massive game changer, because you're then able to connect all these different marketplaces, right? These different exchanges with a property in another corner of the world.
And the difficulty is you're overcoming very real human biases, right? A confirmation bias of a brand, right? Whether you're talking about Bank of New York or State Street or some big, or BlackRock or some big brand that, God bless them, they earned that brand. You know what I mean?
Yeah.
Some of them over hundreds of years, and they can deliver inferior service. Not saying that they do, but they can deliver inferior service. They can be more expensive. But what happens? People go there and they see data points that confirm their thesis that already exists in their mind based on the brand, and they have a default to that because they don't have access to data. And in the absence of data, you go to that thing that you know. You know what I mean? And so they go to this trusted brand. Hey, listen, this smaller entity that is getting better returns, you don't know what you don't know. So you give up that opportunity with the new manager, with the new person to go in, versus Xavier and his partners who have the resources, the staff, and the team to dive in and do the diligence and say, I can make a bet. Well, the average investor doesn't have that, right? And so he has the ability to say, I've got the resources, I can go in and dive in, as you described it, the difficult situation, distressed assets. And when you said that, I smiled. I was like, which of those were Invenium, right? And as you talk about that, you can dive in. And I think really this is, if we can deliver data symmetry, where you can begin to do this, not only are we going to go away from brands, we're going to go away from geographies. We're going to go away from specific sectors where we're going to see people being forced to find alpha in new geographies, right? Which is good for the global economy, right? They're going to be going into developing nations. You have a great product in a developing nation and you have no way to prove the data in that asset. the ability to get somebody to invest is almost impossible. And if they do invest, they're investing at a cap rate that you wouldn't dream of getting for a comparable asset in the United States. You know what I mean? Like, in the economics are being stripped away from the person doing this. So this data symmetry matters. And Albert, I'm going to take that right over to you, right? As we talk about DeFi and the ability for these new lending protocols and these new mechanisms to have locked value against real world assets, right? So that the private markets can trade. We've got to service that data. We got to be able to structure that data. We got to be able to pull data out of, unstructured data into structured data. We got to power those computational tools real time. And where does AI fit into that? How will AI plugged into DeFi allow scaling? And then what does attribution plus AI do for scaling of DeFi?
Great question. So let me answer it directly first, and then I'd like to draw an analogy. So first, I think AI is a great equalizer. It allows a company to essentially leapfrog all the in-between technologies of processing their data that many companies have invested in, and now there's just a better way. And let me draw an analogy. So in China, with their payment processing, they did the same thing. So not too long ago in China, it was essentially cash-based economy. And in the United States, we have a huge credit card-based infrastructure with machines and points of sale and all that. In China, they skipped all of that and went straight from cash to mobile payments. And in this country, because of our enormous credit card infrastructure, we still don't have mobile payments everywhere. But in China, almost overnight, it seemed like they just leapfrogged that entire investment infrastructure and just went to the best technology that was available right at the time. So they went from being behind to being ahead. And Invenium, and especially Invenium AI, represents the same opportunity for those who feel maybe a little behind on how they're using their data, which I think everybody does, unless you're really on top of it. So Invenium AI and AI in general is an opportunity to leapfrog all of the in-between methods that we used to have, and now there's just a better way to do it. And I think that's, to the credit of all of you who've been working on the Invenium tech stack for a long time. It was always forward thinking, but the future is now.
Yeah, and as we think about this, right, I want to talk about two things with, in response to what you just said. Number one, this is a real issue. That the incumbents who have the sunk cost are going to fight the evolution, right? They just are, like, full stop. And some of those incumbents are massive, right? Particularly when you talk about servicing and processing the data on alternatives and the GPs, right? And their processing stack is not even a tech stack. It's a human process connected to Appian, Zapier, or Asana, right? Like, literally, okay, I got to do this step. I'm going to assign it to this person, and they're going to do the 10-finger automation, right? And then that's going to go to this person, and they're going to do the 10-finger automation. And then it's the next person in 10-finger automation. And then you say, okay, now where did this information come from? We don't know. That's what so-and-so gave us, right? But literally, each step is a barrier to transparency. It's a barrier to auditability. And what we're doing is creating this mechanism by which, as you said, AI plus attribution in a federated data environment can have people providing microservices where all of a sudden you're going to be able to use the gig economy for all of these steps along the way. State Street used to do this discrete thing, but now we're going to say, okay, State Street, Bank of New York, Socium, Apex, MUFG Investor Services, which one of you wants to do this? And by the way, the plug and play is not we have to train a new person. It is all the data is already teed up. It's in a system. We now need high value knowledge work, not data entry. We're not looking at, fat finger errors, right? What we're doing is we're applying real intelligence to AI, because AI took all of the rote function and as you said, it leapfrogged over what is this ingrained technology and process. Now, if we're going to talk about MakerDAO or Goldfinch or Centrifuge or RWA.xyz or Coinbase standing up lending protocols where they lock value, crypto or stable coins, and then they lend that out on a programmatic basis. This is the future of securitization, full stop, right? And the future of lending. The only way they can do that at scale and maintain returns and quality is they got to use automation to push data into those systems where they can see where that data came from, right? Where they're surveilling that collateral, right? And so, Xavier, let's go into this. I mean, we've been around the horn, right? And over the years, last 6 years, we put rail car loans on chain, right? Where we delivered those tokenized loans to you where you invested into rail cars. And then we had to accelerate against those rail cars, right? And all that data was anchored on the chain. And then we took it, and some of those rail cars we sold, and some of them we scrapped, right? You know what I mean? For the metal. And what people don't understand is tokenization is not just how do we create a token, it's how do you create a token that preserves all of your legal rights, right? That when there is a default where we can go accelerate, when we can do this. And private markets it needs liquidity, it needs data, but it also needs actors who will put the elbow grease in to make the deals trade. You know what I mean? Because as you know, not everything's put together, right? How many times when you come into a young company, do you have to help them build up their reporting processes, et cetera? And I think what we want to talk about is talk to us a little bit about how private markets are going to become a reality in a tokenized form from your perspective.
You know, I remember when you explained me what Invenium was doing, you used, for me, a very interesting analogy, or at least it talked to me, right? Which was, we have paper today, right? And you say, well, tokenization is, it's like when we move from paper to digital on our computer, right? To PDF. And most of the people at the beginning were saying, well, paper is very convenient. I can write on it. It's there. I can share it easily. And today you realize that, well, digitalization, it's much easier to share. You can go forward. You can redo. There's so much more option that today feel obvious that 15 years ago, most of the people would say, I don't need it. And I think we are in the same phase here with what you're doing, right? Is people now are starting to use, and when they use, they understand the benefit of it. And you got to put that in their hands so they see the difference. Because otherwise they will say, I got a data room, yeah, but what's the veracity of the data, right? How I'm sure that this is the last updated document. So for me, what's really, it changed trust, it increased trust, and that therefore speed. And this world is all about speed, right? You need to go faster. It's accelerating. I mean, it's the nature, it's the nature of nature, right? To change and to go faster, right? So I think that's what I see here, right? It's trust and speed. There's other stuff, but in my mind, those are the key words.
Right? When we think about trust and speed, right? Trust in the data, we can use the attribution, we create speed, but also there is this collaboration. It's trust and speed in a collaborative ecosystem, meaning I'm not sending my data to Marcin and then I'm sending it to Xavier and then I'm sending it to Albert, but literally I'm working on a document and all of a sudden everybody's working on the same document. They can see it, and if it gets updated, everybody sees this. And anybody who's ever worked on a Google Doc in college or in a collaborative environment, and they say, why don't email it to me, go put it on SharePoint, right? And we're going to all work on it together. So we got one, because if you don't, that collaboration's a pain. and everybody working on one deal at a time, that's great. But anybody who's administering portfolios with a lot of assets, that's when all of a sudden you say, this can transform my reality. My operating reality will change. You know, Albert, we're talking about one of our largest cash paying client, right? And they're just moving this a large portfolio, just under 100 loans. Each loan has 3 to 20 assets behind it, and we're processing their data, right? And we went from them doing 10-finger automation at what, 20 hours a quarter down to about 15 minutes, right? We're literally we are processing all of that data, and then it technomagically, right, gets put from a structured piece of data into another structured piece of data, and there was no 10-finger interface that needed to be utilized in order to push that data into the new system. And everybody can see the source of the data, right? They can see, you know, we talk about data triplets, right? You know, in data pairs, everybody talks about value and attribute, 100 square feet, you know, $300. But if we say triplets, it's 100 square feet. And here's the pointer to the document and the anchor and the payload of a block where we can prove this is the document. So we have provenance directly tied to the data pair, and it becomes a data triplet, right? And it is the triple line of triple ledger, right? And we go and we can do this. And I got so excited about my question, I went into a stump speech. So Albert, I'm sorry about that, right? But I was talking about that one client. Talk to us a little bit about this efficiency, where we talked about speed, trust, and collaboration, right? And the only thing that I would add, but what are we seeing real world in that speed?
Sure. So the way that I think about this is cloud computing revolutionized the way that you interface with people that you trust in your same organization and how you share data amongst them. Blockchain revolutionizes how you potentially interface with people you do not trust. And that's what's really interesting about it. And the particular synergy with AI, you know, AI has some impressive capabilities on its own, but the synergy with blockchain and AI is that there's an enormous accessible data set for AI to learn from. So AI alone enables some serious increases in efficiency, but AI plus blockchain, given that enormous fuel source with AI to learn from, enables orders of magnitude higher increases in efficiency. So the synergy between that is something that we really hope to take advantage of and to provide for our clients.
Yeah, and I'm what beautiful comments, but I'm going to drive you a little bit further to a touch point, right? No names, no. Talk to us a little bit about kind of the orders of magnitude you're seeing, right? You know, you talk about the AI is the fuel. Talk about the orders of magnitude that we're seeing on some of these implementations that we have with the early adopters, right? Even just with our own team.
Sure. So as an example, you know, we had a client, won't get into specifics, but we had a client that had an enormous number of documents that were in, and every, you know, company has this, difficult formats, tables that are hard to read. Maybe they look nice in a graphic design format, but the engine does not like it. The digitization engine doesn't like it at all. You know, you hit tab in the wrong place and the whole document gets messed up. So we were able to take a process that essentially took a month to do and get it down to grand total of 25 minutes. And that's enabled, first of all, by the scalability of AI. All of a sudden, you can process all the documents simultaneously at once instead of, you know, process one, then the other, then the other, then the other. So that's an enormous efficiency. And my vision for the long term is, you know, on the one end, to allow AI to provide onboarding by extracting data from documents very quickly. But I want to give kind of a long-term view of the benefits that can provide, because the same kind of AI that could be used to accurately and quickly extract data from documents today can be used tomorrow for fraud detection. Hey, this document doesn't look like the other documents that you've had. There's something a little off. The data doesn't look right. It doesn't look like it was generated from real world activity because I have hundreds of data sets of real world activity, and this doesn't fit that same pattern. Something's unusual here, and it raises a flag. And it's the value of discovering that at ingestion is so much more valuable than someone discovering it in an audit 10 years later.
Yeah. Or 10 years later is horrible, right? But by that time, the sun's already set. When it really is blowing things up, when it's discovered 4 months later and there's a financing on the line, or there's something waiting to happen, and then it casts, a specter of doubt on every document that exists. You know what I mean? And you're like, all right, we got to look at every document. We're not, and because one piece was wrong, right? And Marcin, talk about this a little bit, right? When you and I first talked, right? Our first conversation we had, I still remember it. I think the Isabel's restaurant for breakfast, right? Where we met, and you were talking about your goals and how you were trying to create statistical correlations to quality of data and performance of underlying assets, right? And that wasn't exactly what it was, but it's what sticks in my brain, right? Several years later. But talk to us about what this data quality means, right? As somebody who's been a buyer and seller of real assets in private equity or real estate, where you're investing in real companies, how does quality of data change your life as an actual investor, not an allocator to a macro, but where you're picking, I want yellow instead of blue. You know what I mean? Where you are making.
Yeah. It's first off, it's dealing with information asymmetry and efficient market hypothesis. So in my mind, the EMH, efficient market hypothesis, is a nice idea. It's not there. It's a fantastic concept, and again, he won a Nobel Prize for it. So who am I to say anything about it? But still,
the markets are always efficient. Oh, the question is over what time frame? Right?
Exactly. That's fair.
Over 15 years, they're all efficient, right? But not over the next 2 years, right?
The example I usually give in terms of information asymmetry, I usually refer back to that movie Margin Call, where they're trying to unload before everything goes bust. They're trying to unload everything they have on their mortgage portfolio, and I love that exchange where the head broker calls up his counterpart at another institution and says, "Hello, gorgeous. Today, your loss, my loss is your gain." And he's playing off information asymmetry, but he kind of alludes to the fact that she knows more than he does, right? Bottom line, he's got the data, she doesn't. That is an issue. Now, I was trying to build initially an adapted Sharpe ratio for private real estate. Now, the reason for that is it's relatively easier to target that in terms of the concept and the framework. But the whole idea was, well, since real estate doesn't trade every day, why don't we put together these ratios based on market? So you have a Sharpe ratio for Miami, a Sharpe ratio for Lauderdale. So if Albert likes Fort Lauderdale and I like Miami, we can actually come to terms and say, you know what, based on this, right, based on the data that we have, I think we've got a better ratio on Miami. And we can agree in the investment committee that makes sense, right? And like the second step, like the second derivative of this would be actually having market indices where you can actually buy and sell Miami office and be short on Fort Lauderdale multifamily, if that were the case, right? Because you've got the data to support it. So that was my initial take. I'm thinking, you know what? We need to be able to leverage better data. Also, to keep it in mind that data is decentralized. So your data pad is not going to be mixed with Xavier's data or with Albert's data or with mine for that matter. But we can collaborate using homomorphic encryption or some other tools where we share our data, we collaborate towards a ratio, an index. We get paid for that. So data no longer is just a cost center. It becomes a revenue center as well. And we can do better. And that was the whole value proposition.
Yeah. And we all know that the knowledge of the crowd is pretty much right? Like people know if you can actually get access to the knowledge of people who have opinions. And I use Yelp as a great example of this, right? Yelp was awesome when it came out because everybody was doing it and looking at it, and you could say, yeah, this is a good restaurant, it's not a good restaurant, etc. And then you realized people can game it. It was too easy to game. You know what I mean? And all of a sudden, people stopped trusting Yelp because it was no longer an accurate representation of the crowd, and instead it was, the chef's niece and her classmates giving all the good reviews, right? It was not the patrons. And when you cast aspersions on the source of data, the discount on that is just absolute. You know what I mean? And this is where people begin to discount this, whether you're talking about Rotten Tomatoes, right, or you're talking about Yelp, or you're talking about lease abstractions, right, on the underlying value and the performance of an office tower in Miami versus downtown San Francisco, right? And how do you create the mechanisms to continue to season the trust in that data? Because it's this short interval performance. How do we reinforce the data? Because if we can build that trust in that number, in that performance data, the liquidity ratio goes from 30 to 2, or the cap rate, goes from 12 to 3. Maybe not that dramatically, but you know what I mean. This is in no way a future statement. All regulators, I withdraw that comment unequivocally. But we build trust in the system and the metrics, and I want, Xavier, for you to talk about a future state. Talk about your business. If you're able to take businesses that don't have good data, but have good thesis, good hypothesis, good origins that you want to help them develop into a corporation, and they can start producing it, what would it mean if they actually start having blockchain as a mechanism to credential that this is the original data, with AI validating it to other reference sets, so you can say, yep, this looks like the right data, this all makes sense, that would allow you liquidity on the back end, right? What does secondary liquidity do to your world and the types of businesses that come to you for financing, right? That by the way, are still years and orders of magnitude away from an IPO. You know what I mean? Like, where you're coming in young and you're helping them grow, not necessarily to be a 10x, but to be a 3x or a 4x, and feed their families and build a community and build a long-term sustainable business. But they're never going to ever get to on the NASDAQ. You know what I mean? What does that mean?
Which is I mean, the investment in Invenium was a distressed one, by the way. Just to clarify that. For us, it's important because part of the thing we do is we target businesses that are small, that don't have access to the big guys because they are too small, but the local bank cannot finance them because they are too big, right? Is this in between, right? I would say those are probably valuation companies between 10 and $50 million, right? And so part of our job is exactly what you say, is taking that company, which is more a mom and pop kind of company that might have a good product, that might have great ideas, and raise the level, not just of the sales, but of the structure of the company, so it can be institutionalized, right? At least in terms of investor. You're getting out of the family and friend round, and you're trying to get high investment. And our job, from the French background, most of the people say, well, you buy a company and you hold it for life because it's your passion, right? I don't see it at all that way. I think we have an added value at some point, and we stop adding value at another point. I don't have the pretension that if I had invested in Microsoft in the early 80s, I've been able to drive it where it is today, right? I understand that that's our function, and therefore we have always this idea of obviously selling at some point, but if we could create on an alternative market more liquidity, it will be much easier for us to get there.
And I think this gets to the reality of tokenized real world assets, right? We've been building infrastructure for 6 years, right? And we tokenized, we created a token in, I want to say, March of 2018, which was the tokenized rail cars that we talked about, right?
Yeah.
We did a multifamily, in 18, we did about $100 million of trades. We did that multifamily housing project, right, in February of 18. And what we realized is we created that token and the ability to continue to feed data to inform the performance of that token and its value, its relative value against the types of risks that were out there. Risks like completion risk, right? On that multifamily housing, where were they against, the building it and then renting it up, and then that sold, and that was a grand slam, win that investment was, right? The rail cars, COVID and all that, maybe less of a win, right? Yeah. And we look at this and we realize, gosh, we have got to facilitate the ecosystem servicing private market assets in order for people to have trust in source of data, in accuracy of data, right? And relative value to other things that are out there. And I always tell people that, the secondary markets in private equity or even the high yield bond market is far worse than the secondary market for taxidermy. And the reason is, you know where to go to get taxidermy on a secondary basis. You go to eBay, right? And when Xavier, when your wife says, get rid of the moose head in the living room, right? No. 30, yeah, you'd say no, but I'd say yes, right? I'd say, okay. And so, when my wife tells me get rid of the moose head in the living room, 30 years ago, what do? I go put,
garage sale or you
driveway, right? And I put $100 or best offer, right? And hope somebody driving by. And if you live in a cul-de-sac, you're really stuck. Today, I go in, I look up Moosehead, and I can see here's what they're trading for. Here's the condition. And literally that trade will clear instantaneously. But because the variables associated with the security package and the collateral of a high yield bond, they're so unique, literally even that marketplace has a hard time being efficient without human beings in the middle, right? And it's becoming more and more efficient over time. This is what Invenium provides, right? The ability to see all of this. And when do we think this is going to become a reality? So we're 48 minutes into this. Peter Gaffney, there's a bunch of others who've made some comments. Thanks. I'd throw this out. Any questions for anybody here? And what I'm going to do is kind of walk, because we went through that 50 minutes very fast, right? Albert, give us kind of your final comments, and really let's make it Miami specific. What are we seeing in Miami? What are we seeing in that environment? How are we going to, when are we going to start seeing these speed, collaboration, trust, all coming together? And as they touch, we see the explosion or tipping point happen. When do we think that's going to happen?
Great question, Pat. So most people don't realize that Miami is the second largest financial hub in the country after New York City. And it has the largest concentration of international banks in the country, number one. So, trust takes time, and time costs money. So when you're doing a deal, and you're doing it in a currency, maybe from a Latin American country that is more volatile, all of a sudden, 5 or 6 months delay in doing a deal can be absolutely catastrophic in terms of the fundamentals. And so being able to transact, before a currency goes up or down, or in the real estate case, before a value goes up or down, or interest rates, or before a quarter hits and you have to report it on your books, there can be major consequences to taking more time than necessary to do a deal or to get accurate data on an asset. And though, as soon as those efficiencies, companies can put a dollar amount on them and understand exactly what opportunity this presents, both in terms of savings or in terms of increased potential revenue. As soon as they get it, that's usually when they pull the trigger on our platform, in my experience.
Marcin, any comments?
Well, Miami is a gateway city. So we have more and more of international presence and people trying to do both business here stateside, as well as being able to market their businesses, their firms, their investments here stateside. And Miami is the place that has been chosen for a lot of these shops for that to progress. Now, they understand that they need to kick it up a notch for most of these shops in terms of demonstrating compliance and transparency, just because their markets are naturally opaque. Private markets are traditionally more opaque than public markets. And addressing that by giving investors the ability to have a look at their data in a safe and trusted environment that they can actually demonstrate the proof of state and proof of process, and at the same time having the provenance is key. So saying that, look, I know the auditor uploaded this file, I know it came from them, I can trust that, I can trust all the financials. That means when it comes to portfolio theory and I need to allocate towards emerging markets or towards international markets, my life is so much easier.
So, you bring up an excellent point that I'm going to ask everybody to comment on. I know we're coming up on the end of time, but I was talking to somebody who's in a different region of the world who's very focused on this part of the market and has had public companies and private companies and is building a marketplace for their region. And he said people would rather go to a marketplace with less data and less regulation if they know it's not manipulated, rather than be in a regulated market with good data, but they know for a fact it's being manipulated. You know what I mean? And the market makers can put their finger on it, right? And that belief in blockchain and the state of the data and the trading and DeFi that where there are market forces, but nobody has a mechanism to manipulate that's not totally 100% observable by everybody else. Do you know what I mean? And when there is somebody who has an ability to put a thumb, on a marketplace, and you're requiring their largesse to keep their thumb off, man, like that just scares people to death. And he said, I would rather go into a marketplace with private marketplace where everybody knows there is nobody who can manipulate this marketplace per se. And I think that this is the future for, the American, UK, Australian, pick high function European, Japanese marketplace where you say, okay, these are high functioning rule of law corporate, companies, and India is getting there fast. But the reality is, redress in the legal system in India is tough, right? Except unless you're in Gift City, right? But there's Singapore. I just mentioned 20% of the world's economy and 60% of the GDP. You know what I mean? And how do we get the rest of the world in that environment? I'm sorry, that was a really long kind of.
No, but to your point, it's we have, when we raise money with our investors, there is investors that already understand what private markets are, but we have an education part of it because they trust public traded company, they trust public securities. Although, for example, today you'll buy a bond of a big corporation, it's paid 4%. when the inflation is 8%, right? So people almost rather swap certainty, even if they lose money, right? Because technically they are buying a losing money product here, right? But it's publicly traded, so I trust it, right? So in the private market, there is a ton of great companies that get audited that are handled exactly the same way as a public traded company. Nevertheless, you don't get the same trust, right? So that's something I expect Invenium will help, but the future will come, which is people will start trusting as much the private companies' data and accounting and financials than the publicly traded, right? Which
I think,
saying.
yeah, and I think, let's go back to when you had negative yields in Swiss and German banks,
Yeah, that's
right?
a very good example.
And when that was happening, you were seeing real estate trading in New York at a 2 cap. And you would say, who in the world would put money at a 2 cap? Somebody who has $1 billion of cash on hand in a German bank and is earning negative 20 basis points, them earning 2 basis points in a large asset, so where they can say, I'm going to go deploy $1 billion and the market can absorb it. Not only that, but I can go out, assuming COVID doesn't happen, in the future. And this is why that was a 2 cap was a rational trade for a lot of big investors. You know what I mean? It's the preservation. And to think that these things are not connected is to not be paying attention, right? I'm going to go around. These are our last comments. Xavier, I'm going to give you the last word. Albert, anything else to say?
Yeah. So what I think is very helpful is as companies are adopting these new technologies that provide real benefits, AI bridges the gap and allows them to use it more quickly, use it in a more natural language format, ask it real questions in plain English. And that's going to increase the pace of innovation. So it's very exciting how much benefit we've been able to provide for our clients already, and how much we will in the near future. So we've launched the request form, application form for the alpha release of Invenium AI. We've had a pretty enormous response already, and we're very humbled by that. There's no way we're going to be able to get everyone in the program, but if anyone hasn't applied, please apply. We want to make sure that we get a good representative sample into that first alpha release.
Yeah, and I just have to say, I'm so encouraged every time I see one of your demonstrations or hear about the advances you're making. Albert, thanks for bringing all your skills to Invenium. Marcin, give us any final comments.
It's exciting to see all of our clients and the market evolving to the point that they see us help them deploy their data better, interact with their counterparts a lot better, help them monitor and organize their legal and financial covenants. At the end of the day, making sure that their data sings so that they can focus on what gives their business an edge.
Yeah, and I was about to take that in another direction. Yes, I agree. Yes, Xavier, you have the final word, my friend.
So two word, if you may, because this is my city, and I haven't talked about it in the last question you asked, right? But I guess my background probably explains why people are coming here, right? It's just Miami is just amazing because you see those Asian city booming. I remember being in Singapore 20 years ago, Shanghai, all those cities, how they have been coming in one generation, 20, 25 years. I think the only city in Miami that actually followed that kind of growth is Miami. I didn't know the numbers Albert just told, but it's pretty impressive that we're the second financial place. We're probably 20 years ago, we were just a vacation spot, right? But for the final word, I will say that technology imposes itself, right? It's also because it solved a problem. And it solved a problem even if today people don't even see they actually have a problem. And I think that's where you are.
we are, and I think that people can't imagine the world with the freedom of time given back to them. You know what I mean? And I think that's it, right? We need to help them understand what will that freedom and that liquidity and that price discovery bring to these markets. And we're so excited. We're grateful, Xavier, to you for hosting us for this meeting we're having with potential investors later today, and for journeying with us for the last 6+ years. Thank you so much, or 6 years, I guess. And Albert and Marcin, guys, always great to be with you. Thanks so much.
Of course.
Thank you, guys.
Bye.
Have a good day.